Hi, this is Zach Mayer with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 10th of November. Starting off with the FTSE 100, even with a interest rate cut, the effects of the disastrous budget, especially in terms of national insurance, seems to be kicking in now. We're below the 200-day moving average there, around 8100. The longer we stay below that, the greater the chance of a retest of August support there towards 7920. Maybe as soon as the end of this month. 50-day line falling rapidly, and RSI failure below the neutral 50 level to start November. And of course, this is a big contrast to what we're going to see in the US. Moving on to the DAX, and here you can see that we've held steady above the rising 50-day line. That's around the 19,000 level. Want to break that October resistance line there at 19,500 to hit the top of a rising trend channel there at 20,500, maybe now by the end of the year. On the downside, we've got the floor of that rising trend channel from this time last year at 18,900. The worst case here, of course, that we would have to test the 200-day line at 18,300 as we did back in August. Onto the Dow, and here the celebrations continue with the market actually pushing through our previous price channel top there, 43,700. Above that, actually, we've got the chance of up to 45,000, and the market gapping up there, so that is a pretty strong signal. I suppose in the near term, the longer we stay above the 43,700 area, the better and the greater the chance of 45,000. But obviously, we are overstretched, and the chance of filling that gap down sometime before the end of this month has to be taken seriously, even though we're not expecting anything lower than the 50-day line. Whatever happens, that's there at 42,200. Moving on to Bitcoin, which I suppose has been a clear winner of the Trump victory, and here we were looking for 75,000. Nice little mid-move consolidation bull flag there either side of 75,000, and now looking for 87,000, which is the upper parallel of that June resistance line. Projection, we already had a RSI rebound at neutral 50, which was the leading indicator on the move higher near the 70,000 level, and so things have worked out rather well. 87,000 maybe by the end of this month if we are lucky. Worst case on the downside is we've got to head back down to that September uptrend line at 70,000, but that doesn't seem likely after the latest bull flag breakout. Moving on to gold, and had a bit of a hiccup after the Trump victory here. But at least we're within a rising trend channel. At least we bounced off the 50-day line there at 2660. Above that, looking for, I suppose, a return to 2730, which was mid-October support. But we need to get back above that in order to head up to the top of the rising trend channel from back in June, as high as 2840 by the end of this year. On to the pound, and here it's interesting in the sense that we've, I suppose, ground to a halt in terms of the price action. We did bounce above the 200-day line, 128.10, but we've got resistance in the top of the range of 130.50, and unless we get out of that particular range, not much to say on pound dollar at the moment. Moving on to the stocks, and starting off with Amaroq, which I interviewed during the week. A very dynamic interview, obviously, and you can see that the price channel, or the price action here, very dynamic as well. We gapped up through the 50-day line there at the end of September, and I suppose we're likely to see more of that kind of positive price action given the first gold pour is imminent. As far as the upside from where we are now is concerned, one would be looking for progress within a rising trend channel, as I'm drawing at the moment, and perhaps hitting the top of that channel with its base around 75 pence at 95 pence by the end of the year. 50 and 200-day lines both rising. That means we're going to a golden cross. That typically is the strongest part of the cycle. We've already had that in the run-up to a golden cross, hopefully over the next week or so. But above 75, looking for 95 on Amaroq. On to Aptamer, and here we're looking for progress within a rising trend channel base here, and on Friday that kicked off well. We already had the gap to the upside. We've had got the rising 50-day line as well, two gaps to the upside in fact, and looking for the shares to hit 0.35 by the end of this month at the top of that rising trend channel base from the beginning of August. On to another good-looking situation, which is clean power hydrogen, and here you can see that we've had an unfilled gap to the upside above a rising 50-day line, or through a rising 50-day line, looking for the shares to break the 200-day moving average at 11 pence, which actually looks like it's rising at the moment. So looks like we're into the run-up of a golden cross, and looking for 21 pence, maybe as soon as the end of this year, which is the top of that rising trend channel from this time last year. Ideally, we stay on the right side of that 50-day line, 8.9 pence. Next up is DG Innovate, and here the shares taking up the slack of the sellers. One would assume we broke out of that falling wedge, and we've had a test of it as well, the test of the resistance line there, 0.05. Closed the week on a high, let's say, well, at least the high for this month so far, and looking for the shares to hit 0.11, hopefully by the end of this month, especially while we're on the right side of the 50-day line there at 007. On to Eneraqua, which where the fundamentals are slightly troublesome still, let's say, but the shares going into a golden cross in the next week. Initial target here was 55 pence, and the next target now for the end of the year, hopefully up to 72 pence, especially while we remain above recent resistance at 45 pence. Stock of the autumn to date has been EnergyPathways, and a nice rebound here. The next level here around 9.75 pence. If we can get through that early this week, then it's up to 13 pence as a best case scenario target by probably the end of the year, but let's see if we can get there by the end of this month if we are lucky. Only back below the old target there around 6.6 pence, really delaying the upside scenario. Moving on to Georgina, which looks like it's managed to withstand the psychotic comments of the bears. We bounced off the support line that we were looking to bounce off, which is one from back in August, around 8.3 pence. Initial target here, 10.5, and then looking for 13 pence, hopefully by the end of next month or even sooner than that. Moving on to Helium 1, which had a great end to the week, and it's a shame I didn't talk about it on either, well, especially on Thursday, in fact, because that would have been quite clever, but it's broken a line of resistance there, 0.88. We're above, or closed the week above the 50-day line at 1.02 pence, just shy of our initial target there at 1.1, and looking for 1.3 at the rising 200-day moving average by the end of this month, or even sooner, but a nice trend line break set up there at Helium 1. On to Helix Exploration, keeping the helium theme going, and here we've got a rising trend channel, and the top of the channel there at 32 pence. We've been looking for that quite some time, but it looks as though this time could be the one while we're above the 23 pence area. Hopefully get to 32, ideally by the end of this month. RSI rebounds at or above neutral 50, which tend to be very reliable indicators, leading indicators on the upside. The stock which doesn't get so much attention is Induction Healthcare, but the gap higher over the course of the end of last month, and they pushed through a now rising 50-day line, suggests we've got a turnaround. Looking for 16 pence by the end of this month, which is obviously quite a punchy call, but while we're above that 50-day line at 7.8 pence, that's where it looks as though the shares are going. I haven't looked at Metro Bank for a while, at least since the spike higher that we had at the end of July. We were looking for the shares to hit the top of a rising trend channel at 90 pence while they remained above 50 pence, and we've nearly got there now. In fact, now we can say that above 74 pence, the old October resistance, looking for 90 pence by the end of this month or even sooner. What will be interesting is, or what looks interesting, is that we could actually be going into a steeper rising trend channel, which would promise a move towards the £1 area. So well worth following up on that. On to Ondo, which I interviewed I think last week, and here unfilled gap to the upside did the trick to get the shares back above the 20 pence level. We had a little flush out above 20 pence as well, and the view at the moment is that we're looking for 32 pence by the end of this month, while we remain above the recent swing low at 21 pence. On to the last two. The first one is Synectics, and here a wide rising trend channel from
this time last year, and looking for the shares to hit the top of the channel as soon as the end of this month at £3.6. The end of next month at £3.60, especially while we remain above the old October resistance at £2.94 on an end-of-day close basis. Massive gap to the upside in September, and that step fashion progression, very strong chart indeed. Certainly a company to keep an eye on. Finishing up with Euro Metals, and here we've been in this triangle, looking to break out of that triangle. Top of the triangle now, £1.40, so an end-of-day close above £1.40, and we'll be heading back to the best levels. This should be a rising trend channel, which has its support line where I've drawn it, around the £1.30 area, and then the top of the channel, if we break out through £1.40, as you can see, would be way up towards £2 and beyond. That's it for me today. More updates during the week.